Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, at this time on a Monday morning, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, TheKouk.com, and on X using the handle thekouk. Stephen, good morning.
Good morning. I'm all dressed up with somewhere to go. But what a week we've had. What a week coming up. All good fun.
Oh, man, we could talk about the last 10 days, let's say. So yes. From sort of Friday week ago through till the end of last week. Madness, Stephen, madness.
Where do we start? We got the disappointing news from the US jobs market, the unemployment rate ticking up, employment a little less than expected, wages growth starting to come down, chatter about, the Fed's missed the boat, they've made a mistake. Rounding it out, then we had the Bank of Japan hiking interest rates, which sort of killed the carry trade. So that Monday last week we had stock markets crashing basically. The Japanese market was down, I think, 12%, if I remember correctly. And, US markets, the tech side was down 4%, 5%, 6% intraday and overnight and all the rest of it. And demands for urgent emergency rate cuts from the Fed. And then through the week, it settled down a bit. But then, of course, we locally had our own Reserve Bank decision, and Michelle Bullock spoke a few times, and Sarah Hunter, the chief economist at the bank, gave a talk too. So I didn't know where to start, where to end, and what to digest. There's just so much on the smorgasbord of information.
Well, where do we stand on interest rates today after last week's? We had the forecast, we had this statement, we had Michelle Bullock talking. Where do we stand today?
Okay. That's a really good question, because with that volatility, we've gone from rate hikes being priced in to a whole bunch of rate cuts being priced in to something in between. So, here and now, allowing for a little volatility on, from the time of recording, whatnot. Basically, in Australia, there is no chance of a rate hike priced in. All we've got for the meeting on September the 24th, which is the next one for the RBA, and then through to their meeting in December, about a 70% chance of a 25 basis point rate cut. And that's despite not only at the RBA announcement, the press conference that the governor gave, but Michelle Bullock spoke later in the week and said, look, we, the Reserve Bank, are ruling out rate cuts. And the only thing on our agenda is whether we keep them steady, or maybe, if circumstances show that inflation's more stubborn than we thought, we might even put them up. But the market sort of just, either ignored that or got dominated by global events. As we said, the Japanese story, US weak data, what's happening in the Eurozone. China had some pretty so-so data during the course of last week too. So markets are sort of ignoring the RBA and focusing on something else, and are looking for a higher probability of a rate cut before Christmas than even rates being on hold.
Yeah, it's pretty remarkable. So this week, we've got some pretty important figures out, particularly around the labour market.
This week it's all about the labour market. We only get the wage price index every quarter. And so tomorrow, Tuesday, we get the June quarter wage price index. And the market's got a forecast of about a 0.9% increase in wages in the June quarter. And that would actually bring the year-on-year run rate down to 4% from a peak of 4.2%. Now, like the inflation numbers on a quarterly basis, the wage numbers, a 0.1 difference is quite big. It's quite a big deal, because we've got this, this nuanced debate in Australia that if wages grow sort of 4.25%, it's probably too high. If it's 4%, it's probably just okay. If it gets down to 3.5%, it's probably a little bit too weak. So, that's why that number is going to be so important. But if we look at the quarterly run rate again, we've gone from 1.2 to 1 to 0.8. And so we're looking for about a 0.9 for this quarter. We've also got the jobs and the unemployment number on Thursday. The RBA's got a dual mandate. Inflation, clearly the one that it's putting weight on, but it's also got to have an eye on unemployment.
But does it? That statement after the rate decision the other day, it made it really clear inflation is a priority.
And as someone pointed out on X, I can't remember who it is at the minute, but someone pointed out on X, in the statement, so it's only 800 words the governor puts out in a press release, there was inflation mentioned 20 times, unemployment mentioned once. And I thought that Jim Chalmers' reforms had them with a roughly equal weighting, with the RBA at the moment just wants to get inflation down. But, Sean, this is the critical thing. If we get another uptick in the unemployment rate, like we saw in the US 10 days ago. If we get that 4.1 going to 4.2 or 4.3, and who knows, the job ads numbers have been so weak, then maybe our market will have a bit of a digestive shock too, and the RBA might have to sort of come out and think a little bit more about their dual mandate. I don't know. It's a fascinating time. We're in this grey area of rates peaking, maybe coming down, and the data will just tell us if and when and what direction and how much monetary policy is going to change.
Very interesting. Stephen, enjoy the week.
It'll be a beauty as always. Thanks, Sean.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.